It's DraftKings Investors Day 2021. The event itself ended less than an hour ago, and just for you, my friend, I have already put together its juiciest highlights. If that doesn't deserve a like and a sub, I don't know what's real anymore. Please enjoy.
I'd like to refer all of you to our safe harbor statement and remind you that statements we make during this presentation that are not statements of historical fact constitute forward-looking statements that are subject to risks and uncertainties. We assume no responsibility for updating forward-looking statements. With that, let's begin. On to legalization trends. We've seen really good progress in only the 2.5 years or so since the Supreme Court struck down PASPA. We are up to about 27% of the US population having legal online sportsbook. DraftKings is present in states that have 25% of the US population, and of the remaining 2%, Nevada represents the largest opportunity. We now believe Canada could represent a very meaningful opportunity for DraftKings. We believe, as we said, that a good and conservative, perhaps, estimate for full legalization TAM in sports betting is $22 billion, and iGaming is $40 billion, and for Canada is $5 billion. Of course, we are not assuming full legalization, and we have kept these numbers the same as last year at 65% of the US population for sports betting online and 30% of the US population for iGaming. On market share, we kept our sports betting market share at the same place as last year in the 20 to 30% range. In iGaming, we've tightened the range a little bit. It was 10 to 20% last year. We've now made it 15 to 20%. The reason being that we are not below 15% in any market that we're in, and we've actually been growing our iGaming share very steadily, and most states are actually over 20% at this point. So we felt like 15 to 20% was a realistic range. In Canada, we assume 10 to 20%. The reason for this is there have been gray market operators for quite some time in Canada, so DraftKings will not have the early mover advantage that we've had in other states. However, we have assumed that we're at 10 to 20% because even in New Jersey, where we entered the iGaming market 5+ years into it, we've still achieved 15% share and have been growing that share. So we think 10 to 20% is a realistic assumption for Canada. When you total all of that up, we are looking at $5 to $7.3 billion as the gross revenue opportunity. As a reminder, our Q4 market share is at the top end of these US ranges with 30% in OSB and 19% in iGaming, so we feel very good about these estimates. Additionally, this does not include 35% of the US for online sports betting, 70% for iGaming, 36% of the population of Canada, and it includes no further international expansion. On this slide, we talk about what our actual market share was in Q4 of 2020. As a reminder, it was 30% in online sports betting and 19% in iGaming. And as another reminder, this is at the top end of what we have assumed for our long-term market share projection ranges.
We have a key relationship with the NFL, all of the major sports leagues such as Major League Baseball and the NBA, the PGA Tour. We recently announced an agreement with the UFC to be their sports betting partner. And then in terms of what's next, some new deals that we've done with Drone Racing League, with Major League Eating, with the American Cornhole League really show what's next in sports in terms of engaging our audience. So all of these deals are really exciting. In terms of localizing our team strategy, what we've seen is that DraftKings has been very successful getting team deals in place in all of our key markets, whether that's deals like the Eagles and 76ers in Pennsylvania, heavying up in New York and New Jersey, for example, with the New York Giants deal, which is the first of its kind to include iGaming, sports betting, and fantasy all in one deal. And our landmark agreement with the Chicago Cubs, which includes a retail sportsbook in the heart of Wrigleyville. Finally, on the media side, we have a huge array of great media distribution deals, things like Turner Sports, which includes the Match 2, the Match 3, Major League Baseball, deals with ESPN, Fox Media, Dish Network, which was recently announced, all really exciting for us in terms of reaching our audience at the highest scale of anyone. DraftKings is able to optimize everything from our media mix to automated bidding on digital platforms to personalization on our product suite. All of that is done through our leading capabilities on data science. We are able to personalize the experience on, promotions, on the content that people see in the products and play, and all the way down through the CRM treatments that they receive through email, push, and retargeting. All of that is really driven through a proprietary technology that we've built using trillions of data points across 10 million plus customers over almost a decade. and it's something that really differentiates DraftKings and our ability to get performance marketing at scale.
Over the past year, we launched 19 new sports and game types, including our basketball game and snake drafts. Both have received great adoption with over 150,000 customers playing our product within the first week. We launched in 4 new states in 2020 and 2 additional ones in 2021. In all those jurisdictions, we continue to be the top-rated sportsbook app. We have added many features such as live streaming video and pop culture pools contests. We integrated our data science platform and improved our experience to be a lot faster, smoother, and more stable. We're just at the beginning of our sportsbook innovation and look forward to migrating over to our own technology platform in Q3 of this year. For our iGaming product, since our last Analyst Day, we were the first to market in 3 jurisdictions with both a standalone product and our sportsbook embedded iGaming product. We launched over 20 new games and will continue to invest heavily in our homegrown games. As of today, over half our wagers are placed on the homegrown games that we've created. We continue to have a robust product roadmap to launch many more of our own games and much more of our own content. Finally, for all of these products, they are all built on our proprietary platform that enables us to have one account, one wallet, and a seamless experience across all our products and jurisdictions. This enables us to launch early in markets and have a stable, safe, and consistent experience. We continue to invest in our teams, both the consumer-facing teams and our platform teams, with a focus on being a technology leader and an innovator in the North American market. Within our product, it is really important to be able to leverage our seamless platform, seamless experience, and the data to make it easy for customers to jump between daily fantasy, sports betting, and iGaming. We will work to create an integrated ecosystem of consumer experiences that will all be powered by our proprietary data and marketing technology. And finally, we have to have the best customer experience. As I mentioned earlier, we have the top-rated apps, and we always aim to create fun, exciting, and personalized experience by making the products that anticipate and respond to our customers' behavior. So as we see, there's a user. We track things like preferred leagues that they play on, the preferred types of teams, what players they like to bet on. Do they like tournaments? Do they like single games? What is their favorite iGaming game? Do they like table games or slots? All this information is consumed by our data science platform and our data environment, and is fed to all of our collective products, both the ones that you see, which is daily fantasy, sportsbook, and iGaming, as well as the ones you don't see, which is a marketing technology platform that Matt talked about earlier. The way that this gets implemented is that for DFS, sportsbook, and iGaming, you see that everyone has the same balance that I have in my account. That money is used, and DraftKings takes the complexity and makes it really easy to play across any product you'd like. If you're in daily fantasy sports, this player, for example, likes UFC. We'll recommend contests around UFC. Since they have $20 in their account, we will show the $3 contest because we know that that may be the one that they would like to enter. Additionally, because this person is in New Jersey, we will identify that they also have sportsbook and iGaming available in their state. So we will engage them with an offer that says McGregor first round knockout, because we know that this person, Paul in this case, likes the UFC and is more likely to bet on that and other particular products. For casino conversion, they like NFL. We have a football blackjack game that we'll offer to see if we can engage them in that product. If they were in our sportsbook product, we would show them the recommended bets like UFC, or we would show them things like a DFS conversion offer of the 100K UFC contest that we talked about earlier. And right inside our sportsbook app, they can play football blackjack. They don't need to leave and download a new app to play. Similarly, in iGaming, we would have the same links. Finally, our marketing platform understands all this data, both internal and with our CRM tools. We'll be able to present offers, maybe like a deposit bonus because this person has a lower balance, or a McGregor win bonus on Facebook because we know that this person likes UFC. All of this is highly automated and happens every single day across millions of different permutations and segments. It's this platform that we think makes for a seamless user experience that will ultimately be very important in differentiating us and winning in this industry. Here are 3 examples of games that we've been able to innovate on. Number 1 is Slider Blackjack. Slider Blackjack is a game that's only in our embedded sportsbook product, which allows you to bet on sports while at the same time playing a blackjack hand. Imagine watching an NFL game and there's a commercial. You can slide up a blackjack hand, play a few hands, slide it back down, and engage with your sportsbook experience. We have seen that Slider Blackjack increases engagement substantially within our sportsbook product. Another example is March Mania Roulette. Given our strong base of sports customers, we have created new and innovative offerings that engage customers in the games that they love, but make it more themed around sports. We know that our customers love new and exciting games over the different sporting seasons. We've been able to launch new content that will engage them and make for a fun experience. And finally, launching new games like Baccarat. We were the first to launch a baccarat version with side bets that make the game more exciting. This is a version that is loved in the casinos but not available online before we launched it. We believe that further expansion of our original gaming content will be monumental to the success of our iGaming product. While we also continue to integrate new games from innovative creators, we will focus on developing games that will either differentiate our product or replace games that consume a lot of our revenue or have substantial cost. We have been working over the past year and have begun the process of migrating to our own platform. We are currently in beta mode, and over the coming months we will move over to our platform and expect to be complete with this by the end of Q3. We believe we will have full control over the entire experience in sports betting. This means we will own our own technology, trading tools, and experience and be completely vertically integrated in the industry. As a technology company, we're excited to have full control of our product and the opportunities for innovation that this will unlock. However, we are mindful that this is going to take some time. We're in the first inning with our sportsbook product, and it'll be a multi-year journey for us to launch all of the amazing features we plan on building. Sport betting is a pretty complicated product, and right now we're developing what we believe to be the strongest foundation for our future.
This page is a purely illustrative page to give you a sense on why promotional investment will naturally decline within a state over time. On the left-hand side, you can see an illustrative depiction of the higher promotional investment for a new customer versus an existing customer. And on the right-hand side, you can see that as a state mixes out of new customers and into existing customers, the overall promotional investment decreases. Next, I want to update you on gross margin rate. Last year, we talked about our outlook for New Jersey in 5 years, and this year we are using more data. As you can see, we now estimate that a typical OSB and iGaming state will have an approximately 58% gross margin rate after 5 years. On taxes, when we take the straight average of our estimated taxes as a percentage of net revenue in 5 years, we are at 24%. Notably, this calculation includes Pennsylvania, which is north of 40% for both OSB and iGaming. On platform, the big thing is that we are removing the cost of our current third-party bet engine provider based on the confidence in our migration plan, which will be complete by the end of Q3 2021. The remaining portion of our platform costs include AWS and a handful of other third-party suppliers. On payment processing, we are seeing early success in not only renegotiating better terms with our payment providers, but also encouraging our players to use lower-cost payment methods that are also more convenient for them. And on revenue share, as we continue to solidify our leadership position, we find ourselves getting better and better deals on market access as states open up. For the first time, we want to provide insight into real data on customer and revenue retention. Since Q3 2018, we have had 40 state quarter cohorts. Indiana in Q4 2019 is a state quarter cohort, for example, or Colorado in Q3 2020. For 10 of these 40 state quarter cohorts, we have 4 full quarters of data after the acquisition quarter. And for 2 of these 10, we have 8 full quarters of data after the acquisition quarter. And for these 10 state quarter cohorts on the left-hand side, you can see that 82% of our players continue to engage with us over their first 4 quarters. And for the 2 state quarter cohorts, where we have 8 quarters of data, 87% continue to engage with us over their second 4 quarters. And for revenue retention, we can only analyze the 2 state quarter cohorts, and you can see that these cohorts experience 108% revenue retention in their second 12 months relative to their first 12 months. Outstanding results. Notably, these results include no adjustment for the COVID-impacted periods in 2020, so it is reasonable to believe that results could be better on a go-forward basis.
We know when people like to engage with our products, whether they respond to certain types of push notifications. We have saved payment methods for many of our customers and more. In most states, we are converting in the 60% plus range. Pennsylvania, we are a little bit lower. The reason we are lower in Pennsylvania is we haven't invested as much in that state due to the higher tax regime. Also, we believe there's upside to these numbers. The reason that we believe that is that there are still some issues with the industry that are causing the numbers to be lower, such as many payment methods not working and customers that want to engage on these products actually not being able to get through. We think that that'll be something that improves over time as more and more issuing banks consider the right way at the right limits to allow customers to engage with online sports betting. Earlier, we noted that we think that marketing efficiency will improve as more states launch sports betting. There are a number of reasons for this. First, there are certain channels, such as buying on television, where the cost per impression is actually about 3 times higher to buy locally versus nationally. Secondly, there are currently things we are doing, such as our integrations into programming like The Match, which are national since there's no local feed of those broadcasts. As more and more customers become eligible to sign up for sports betting, those same integrations will improve in performance over time. Thirdly, even digital channels where we are always going to target specific states, such as Facebook and Google, at higher scale, you get better cost per clicks and better cost per impressions as you are competing against a better universe on the bidding front. Lastly, we also believe that there will be regional benefits too. An example of that is when New Jersey opened up, we were buying in the South New Jersey DMA for television. That also spans Philadelphia. Once Philadelphia, it's the whole state of Pennsylvania, had customers that were eligible to sign up for sports betting, those same television ads perform better as we did not need to increase, although sometimes we will increase because with better efficiency we can spend deeper.
We have said in the past that we expect our cohorts to pay back in 2 to 3 years, and we are well on our way to achieving that. When you look at the 10 state quarter cohorts, you can see that after just 4 quarters, they have generated gross margin dollars equal to 70% of their acquisition cost. And when you look at the 2 state quarter cohorts, you can see that they have generated gross margin dollars equal to 254% of their acquisition costs. When you stack these quarterly and annual cohorts on top of each other, the result is that a unit will turn contribution profit positive in year 2 or 3 after launch. You can see here that we generated $8 million of contribution profit in New Jersey in 2020, despite the impact of COVID. We had a very unique customer acquisition environment in the back half of 2020, which allowed us to invest heavier into customer acquisition. These investments impacted our contribution profit in 2020. However, as you can see from our projected 2021 numbers, we expect to realize substantial benefit for this investment. And finally, we expect our state playbook to pay large dividends in 2021 with approximately $65 million of contribution profit this year. We have roughly 428 million shares outstanding today on a fully diluted basis, and that we estimate that by the end of the year, we would have approximately 432 million shares outstanding on a fully diluted basis.
As a reminder, we have increased our TAM estimate for both online sports betting and iGaming, as well as included Canada in our long-term projections. We did not change our assumption around legalization in the US for either online sports betting or iGaming, and we did not change our market share assumption on online sports betting. We did tighten our range for iGaming. All of that comes together to a forecast of $1.7 billion as a very achievable and perhaps conservative long-term EBITDA target. This also, as I remind you, does not include 70% of the US for iGaming, 35% of the US for online sports betting, 36% of Canada for online sports betting and iGaming, nor does it include any other international expansion or any expansion into new products.